Talk of the town and expected to have a significant near-term impact. A report by InnoVen Capital on the India startup outlook tells us a more nuanced story. Based on insights from over 100 startup founders, only 31% of those surveyed founders believe that artificial intelligence will significantly impact their business model over the next 2 to 3 years. The survey also highlights AI as the most overhyped sector, while manufacturing emerges as the more underhyped. Moving beyond AI, fundraising sentiment has improved sharply. 85% of founders are optimistic about the fundraising environment in 2026, with SaaS and manufacturing founders being the most bullish. Joining us now to take this forward is Ashish Sharma, Managing Partner at InnoVen Capital. Thank you so much, Ashish, for joining us on the program. 2026, what makes you most excited? You've come out with a startup outlook report, but if I were to ask you about InnoVen Capital itself, what would be some of the sectors or the kind of companies you would be most excited about?
Clearly, when you look at Parikshit, the emerging sectors, it has to be, AI, advanced manufacturing. So that's where defense, aerospace. So there's a lot of focus in these areas. These sectors are still very early in terms of the amount of capital they can absorb. So at least in the next year or two, the top three sectors from a funding standpoint will still remain, fintech and consumer, but the center of gravity is moving towards deep tech.
Right. When you speak about what founders and startups are looking for in 2026, how does the funding window actually look like? Will there be more funding opportunities and higher funding opportunities in 2026 than there were in 2025, despite global uncertainties?
I'll give you a little bit of a context. So if you recall, right after the post-COVID boom, we saw primary funding of north of $30 billion. And, over the last 2 or 3 years, we have been in a holding pattern. Last year, the primary equity funding into startups was close to $11 billion, which was slightly down versus 2024. So on one hand, the funding has been stagnant over the last 3 years. The round sizes are smaller. Just if you look at 2025, there were only 12 rounds greater than $100 million. The year before, it was 25 rounds. But the silver lining has been ability of companies to get to public markets. Last year, we saw 15 to 16 very prominent IPOs, whether it was, Grow, Lenskart. In fact, 3 of our portfolio companies, Aether Energy, Capillary, and Bluestone also were able to hit public markets. So it's a mixed bag. IPO side is very positive, and I think there is a good understanding that founders have what is the right kind of financial architecture required to go public. Otherwise, if you look at early stage or growth stage, their funding remains in a holding pattern over the last 3 years.
Right. You've said that AI remains an overhyped sector, while manufacturing is the most underhyped as per your outlook and survey. Why is that?
I think, again, versus me saying, this is what the founders are saying. And clearly what happens is AI is garnering a lot of attention and a lot of eyeballs and investor interest. So as you can imagine, the founder set here was fairly diverse. So I think most founders feel that maybe AI is getting too much love. But, on a serious note, in India, AI still really is a small part of the overall funding mix. If you look at the Valley, today almost $7 in $10 are going to native AI companies. Advanced manufacturing is something that we as a nation require. But it's only, I would say, in the last 9 to 12 months that investors have started looking at that sector more seriously. So clearly, in the past, manufacturing and hardware in the VC world was hardware is hard. But I think there is a realization that particularly as a country, you need to control your own destiny. And when it comes to critical technologies and, advanced manufacturing, which is what China excels in, I think India needs to kind of, improve its game. So we are seeing a lot more interest, but still it's early days.
Right. When it comes to the growth outlook and what the government could do, as the budget is also around the corner, what the government could do in terms of policy making or ease of doing business, which could give an impetus to startups and also maybe higher funding, what would that be?
I think two things. I mean, with respect, I mean, the government is very clear when you look at all the initiatives, Startup India, the government is very clear where would they like capital to go. And particularly as it comes to, sectors that require to take, long gestation period require R&D. I think that's where they're putting a lot of their energy. So as you might be aware, I mean, there is a 10,000 crore RDI fund that the government is launching where they will basically channel that money to eligible fund managers and finance companies to put into, advanced manufacturing and AI, health tech, things that India really needs to build. And there is not enough private capital out there to support this. So I think that's a positive. I think on the areas where founders feel things can be better is around, regulatory certainty. I mean, in the past, I mean, we have had some high-profile cases where maybe the industry became too big and there were a lot of gray areas, and then suddenly the government came down and the whole industry or the whole sector actually went through a lot of disruption. I think founders would like a lot more certainty around the rules of the game, before the industry becomes too big and it could lead to a lot of collateral damage for the sectors. I mean, those would be the two things that come to my
Right.
mind.
Okay, thank you so much, Ashish, for joining us with some of the key snapshots of your Startup Outlook report for 2026. Let's see what the budget delivers for startups and their founders this year. That's all the time we had here on the program. Thank you for watching. Goodbye.